I would say that this video is long overdue because shared ownership is one of those topics that I get asked about probably twice a week. So today I'm just going to cover off shared ownership, what it is, the pros, the cons. I'm going to answer the question, is shared ownership a good deal or should I avoid it? And I'll also give you some of my insight into shared ownership based on doing mortgages for people every day and being in finance for over 30 years. Make sure you stay tuned into the end because this is a comprehensive overview that will probably answer all the questions that you have and debunk any myths that you have about shared ownership. So, what is shared ownership? I'm going to go through what shared ownership is, tell you a little bit about myself. But let's just start with the definition of shared ownership. So, shared ownership is a government backed scheme that allows buyers to purchase a share of property. It's typically between 25 and 75%, while paying rent on the portion that they don't own. So, it's shared ownership. So, you own part, you don't own part. The part you don't own, you pay rent on. It's aimed at first time buyers, offering a smaller deposit requirement and the option to increase ownership gradually through something called staircasing, which I will explain what staircasing is. While it can provide an affordable route onto the property ladder, it also comes with ongoing rent, service charges, and certain restrictions that buyers need to understand before committing. My name is Anthony Lindsay, and I've been in finance for over 30 years. And particular topics that I talk about, I'm really passionate about because as someone who worked in collections and pre-litigation for over a decade, I've seen what happens when things go wrong. So for almost 10 years or a little bit over 10 years, I dealt with everybody that had a situation where things went wrong. So I'm really well versed in what can go wrong if people don't have the right products or don't understand what they're getting. You make sure that you connect with me on LinkedIn. Make sure that if you do need a mortgage broker that you reach out to me, but be sure to watch this video until the end because there's some very important information. So shared ownership. I'm in a WhatsApp group, a property WhatsApp group, and this has been an ongoing topic for probably the last couple of weeks. And one of the great things about this group is that there's hundreds of people in there from different walks of life. And when the topic of shared ownership comes up, I get some people saying they love it, some people saying they hate it, and each individual will say what their experience is. So when someone comes to me and asks me, should I get a shared ownership property? I tell them to do two things. I tell them, go on Google, which will be a little bit objective in the sense that you're just searching for a term and you'll get to see a lot of things. So go to Google and search shared ownership nightmares, and you'll find all the horror stories so you can do your research. But then search why I love shared ownership. And what that will allow you to do is get a view of what people are saying, what their feelings about shared ownership are, and why. So that's always a good starting point. How does it work? People ask me all the time, how does shared ownership work? And some people think they understand, but when we start going through the mortgage process after they've found a shared ownership property, I realize that they don't actually understand. So this is a video that will be useful for them. So the first thing that you're going to need to do is find a property. So shared ownership homes are usually offered by housing associations and can be either new builds or sometimes they're resale properties that other shared owner is selling. So someone already had a shared ownership property and they're selling it for one reason or another. But first and foremost, you have to find a property. So a shared ownership property is a special class or designated property. It's not a home that you find that is being sold traditionally and you said, I just want to buy part of it. It doesn't work like that. And you will find that 8 out of 10 times, the shared ownership properties, they're going to introduce you to their mortgage brokers. If you are going to purchase a shared ownership, make sure that you work with a mortgage broker who understands how they work, because it can be quite tricky. I would say in most cases, it's advisable not to work with the broker that the estate agent refers you to, because there's been a lot of mis-selling on that. And sometimes it can be a little bit tricky because there's a conflict of interest. But when it comes to shared ownership, sometimes you might want to consider that. But the first thing you need to do is find a shared ownership property, see if it's something that's suitable to you, and understand the setup of it. So you're going to then look to purchase your share. You buy a percentage of the property. It's usually, as I said, between 25 and 75% using a mortgage. So that's what you would come to me for, or use the seller's mortgage broker, and a deposit based only on the share that you're buying, not the full property price. And this is probably why people look at shared ownership, because you're getting a mortgage on a portion of the entire property. I will go through a pound for pound scenario that it makes a little bit more sense to you. And so the deposit that you're coming up with is only based on the portion that you're buying of the property. All right. Next up, you pay rent on the remainder. So for the share you don't own, so let's say you buy 50%, you get a mortgage for the 50% and you pay rent on the remaining 50%. You pay a subsidized rent to the housing association, and it's usually reviewed annually. And we're going to pick up on that point because it's reviewed, that means it can change, which can make it difficult to budget. Some of the costs to consider. So if you're buying a shared ownership property, you need to do your math. You need to make sure that you consider all of the costs. And sometimes the costs that are associated with the shared ownership can make it maybe not the right product for you. So you need to cover service charges and maintenance. Most shared ownership homes are leasehold. Again, can be an issue for people. There is a lot of legislation going through Parliament at the moment around leaseholds, but as it stands right now, leaseholds can be problematic. So you'll need to contribute to the service charges, ground rent, and maintenance costs. Now, you don't know how much those maintenance costs might end up being, so this can be problematic. These can sometimes be a significant chunk of money, particularly in flats. And I've found that most of the shared ownership properties that I've come across and helped people get have been flats and not houses. So this whole idea of leasehold, the idea of maintenance and service charges can be problematic. So if you're asking, should I buy a shared ownership property? You need to understand the related costs. Don't just view it as a quick way to get on the property ladder on the cheap, because quite often it isn't as cheap as you think. Once you have your shared ownership property, you may have purchased 25% or 50%, but what if you want to move towards owning the entire property? That's called staircasing. So I'm going to just talk you through staircasing and selling, because it might not be your forever home. Over time, you have the option to buy additional shares. So again, in this scenario we spoke about, you purchased 50%. You might want to buy another 10% to make it your share in its 60%. That's called staircasing. It reduces the rent you pay on the amount that is outstanding, because now instead of paying rent on 50%, you're only paying rent on 40%. Or you can sell shares. So you can staircase up and buy more shares, or you can sell shares. In most cases, the housing association has the right to find a buyer first before you sell on the open market. So as far as selling shares, I don't mean you're selling part of your shares. You're selling the share that you have in that property. So you're looking to move, you're looking to move to a different area. You're not going to be in that property anymore. So essentially you're sharing. And if you've noticed, I keep talking about the housing association, and every reference to the housing association, you'll notice that they're in the driver's seat. So this can be a deterrent for a lot of people. And this is something to consider if you're thinking about buying a shared ownership property. Yes, you can staircase up to 100% in some cases. And yes, you can sell. But the housing association, in most cases, has a say in what you do, how you do it, and that can cause friction in the process, which can delay it or prevent it. The key takeaways. Now, hopefully you've watched all of this video and you've understood that there are pros and there are cons to shared ownership. It's an amazing product for some people, and for others, avoid it at all costs. So here are the key takeaways. Shared ownership can be a good option for first-time buyers who have smaller deposits and limited affordability. So the key takeaway in that is maybe you just need to save a little bit longer to get to that point where you can buy a home outright. It allows you to get on the property ladder sooner and gradually increase ownership over time. That process is called staircasing. Staircasing is possible. Make sure you read your contract because some housing associations don't allow you to staircase to 100%. And staircasing can be costly and it's definitely time consuming. Success with shared ownership depends on careful planning. Look at your deposit, future staircasing options, and whether the monthly costs fit your long term budget. And by your long term budget, I would say your 5 to 7 year horizon. Don't just think short term. Don't just be so eager to get on the property ladder that you do the wrong thing. So, those are some of the key takeaways of the consideration of is shared ownership the right product for you? Let's look at shared ownership's do's, and then we'll look at shared ownership don'ts. So, if you're considering shared ownership, please do your due diligence. Please find a good housing association. And here are some other things that you should do. Do check affordability carefully. Factor in mortgage, rent, service charges, and miscellaneous things, things that just happen in life. Although most shared ownership properties that I've come across are new builds, you may run into boiler breakdowns or different things that you'll need to repair out of your pocket. The housing association will not pay for it. Do plan ahead for staircasing. So understand the costs and whether you'll realistically increase your share. Think about it, have a plan, have the savings in place, have a savings scheme, and have a solid plan, not just based on best case scenario, but based on how life happens. And sometimes things don't work out the way we want them to. Do consider your long-term plans. Shared ownership works best if you intend to stay put for a while. So if this is your forever home, if you're someone that's come out of a marital home due to divorce or marital breakdown or relationship breakdown, and you're later in life and this is going to be the home that you live in, you buy a portion, then you staircase up, and then that's that. This could be a good option. So make sure you consider your long-term plans. Do get professional advice. A broker or solicitor can flag hidden costs before entering into it. Even if you speak to a broker, it's always good to speak to a solicitor or an independent legal advisor. Let's look at the shared ownership don't. So things that you don't want to do if you're considering shared ownership. Getting a shared ownership property is not right for everybody, but for some people, it's absolutely amazing. But regardless of which type of person you are, these are things you don't want to do. Don't assume it's always cheaper because it's not. Rising rent and service charges can add up very quickly and it can take you outside of your budget. So make sure that you budget well. Don't overlook resale rules. Housing associations often have first refusal, which can slow down selling. So if you're an upwardly mobile professional, like I keep talking about, and you may want to move and you may need to move quickly, this may not be the product for you. Don't ignore the fine print. I've said it and I always say it and I'll keep saying it. If you're getting a mortgage or any financial product, make sure you read. Don't just rely on your broker or solicitor to explain things to you. Make sure you take the time to read it. And if need be, go and seek independent legal advice. Don't forget the moving costs. So legal, valuation, and admin fees can stack up when staircasing or selling. And don't rush in. I find that the calls that I get about staircasing are either before or after the person has asked me about buying at auction, which tells me they're moving really fast and they're looking for something on the cheap, and they're 9 times out of 10 not considering everything. So do not rush in. Shared ownership is a commitment. Weigh it against alternatives like buying outright or help to buy. There's other schemes, concessionary mortgages, just waiting a little bit longer, maybe buying in a different area. Maybe you wanted a 3 bedroom because you wanted one room as a home office. Maybe you just have to sacrifice that for a while, but don't rush into it. Shared ownership can be great, it can also be horrible, but either way, make sure you don't do these things. My name is Anthony Lindsay, and I make these videos to share information. It's not to replace speaking to a qualified professional. It's not legal advice, it's not tax advice, and it's not financial advice. It's just talking through products that people ask me about. Today, we've been talking about shared ownership. Shared ownership, in my opinion, is great for some people. I have people that swear by it. I have people in my WhatsApp group that tell everyone you should consider shared ownership because they've had a good experience. From what I've seen, those are the people that tend to be very detail oriented. They ask questions, they read, they understand, they have good credit. They are looking for their forever home, not for just something to build a property portfolio. And they are willing to listen to their broker. On the other hand, I have people that contact me about shared ownership and I say, do not do it. These tend to be people that are looking for a cheap win, something that's quick and easy. Shared ownership is not quick, it's not easy, and it's not for everybody. So make sure you do your due diligence. I would advise you to seek independent legal advice if you're considering a shared ownership purchase, and be very careful about the housing association guidelines. In my experience, most of the complaints stem from either the leasehold side of things, from the maintenance and service charges, or from the housing association guidelines. So always do your due diligence, not just with shared ownership, but with any mortgage. Please only work with a mortgage broker that you trust, that you know, that is honest, and will tell you and give you the advice that you need. Sometimes it won't be the information that you want, and they might not tell you what you want to hear, but a good mortgage broker will always tell you the best way of handling things. My name is Anthony Lindsay, and I make these videos to inform and educate. If you know anyone that's looking to purchase a home, remortgage, do a bridging loan, or anything that is mortgage or equity release related, please share this video. If you've watched this video, even for a minute or two, make sure you subscribe to the channel because that will tell YouTube that the information I'm putting out is valued. If you've heard something that you don't understand, please put it in the comments. If there's a topic or a product related to mortgages that you'd like for me to talk about, please put that in the comments too. But make sure you like, make sure you share, and make sure you subscribe. And thanks for watching.